Genau. Weißt du, wie es läuft? Klar.
Well, obviously, we've had a major shock in the last few weeks with the announcement of massive tariffs and the fact that it's escalated since, and that we've seen, Trump raising tariffs on Chinese goods. China responded, Trump's response in turn. So that's this sort of escalation, which is obviously poison for the financial market. A lot of uncertainty. I think investors are really struggling to see clear direction. There's always this hope in the background, I think, that Donald Trump will try to make a deal. That we will be able to get him back to the negotiating table at some point, and that maybe in a few months' time things won't be quite as bad as they look right now. But for the time being, the tariffs are here, and we cannot rule out, I think, that it's going to escalate further, and that's depressing market sentiment. The basic bottom line with the trade war, everyone loses. I mean, that's a fact. And I think while the EU and many other countries realize this, Donald Trump clearly hasn't got that message. So everyone loses, and what it basically means is less growth. It means, to some extent, more inflation, depending which country you're looking at. But what it also means is obviously a potential disruption of supply chains. The trade flows will have to be redirected, especially when you look at China and the US. A lot of goods from China go to the US, although I have to say that the share of exports to the US from China isn't as big as it used to be. But that's going to have to be redirected. Some of it will probably arrive here on our shores in Europe. But that's going to take a long time. And if the trade war continues to escalate with tariffs and counter-tariffs and so on and so forth, there is then eventually certainly a risk that we are going to have supply chain disruptions, yes. Well, the ECB is trying to catch up, I think, as we all are. They were on track to have a pause in the rate cut cycle. They were expected to cut next time in June. But of course now, with the tariff war escalating, we have weaker growth prospects for the Eurozone than we had a few weeks ago. So that would justify more rate cuts. At the same time, there's also a risk that these tariffs are going to result in more inflation. So that's something they're going to have to be very careful to look out for. I think it's a bigger problem for the US Fed than it's for the ECB. But equally, I think they're going to be moving from one meeting to the next, wait and see what happens, and then react to the data and events as they come in.
Ich weiß nicht, bei der AD.
Thank you.